Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Friday, June 10th, 2011 is brought to you by Realtik. Alright guys, we're going to get right into the mix here today and discuss exactly what's going on in the market. Let's get right to the charts. This is the chart of the SPY, which mirrors the S&P 500. It is the ETF tracking the S&P 500 on a 10-minute intraday basis. And what you can see right now is the market came down, piercing this little bit of an area here. In fact, I initiated a long position in the market right here at 127.60. I've sold half already at 127.80 for 20 cents, and I have a break-even stop on the remainder with a 50-cent target. So one way or the other, it's a winning trade. That's money management, folks, 101. That's what you have to be doing in a market like this, especially when you're trying to scalp long in a downtrending market. And that's exactly what we have today, folks. A market on a Friday, which is somewhat rare, that is getting punished. Dow is down 139 points. NASDAQ down 35. S&P 500 down 16. That's about 1.25% across the board. And again, for a Friday, that is a solid drop. There's no doubt about it. But in any case, we're still in the profit zone, as you guys can see. Again, taking 20 cents on the long side on an intraday trade here. And again, even though it's pulling back a little bit here, you're still in the money beautifully there with, again, a break-even stop on the second half, worst-case scenario. All right, now, the question that I have that we're looking at in terms of this market is, number one, what's causing the sell-off? And the answer is very, very simple. First of all, you have to look at the dollar. Take a look at the dollar today, guys. It opened higher, which again would obviously put pressure on the markets. What did the markets do today? They opened lower. So dollar higher, market lower. The inverse relationship continues to be dead on. As the dollar opens up here, and this is the UUP, which tracks the dollar. It's an ETF again. As the dollar opens up, the dollar goes right up. And as the dollar goes up, notice how the markets go in the opposite direction. The markets go right down. Now, as the markets bottom right here and start to get a little bit of a bounce, you may say to yourself, well, what's causing that bounce? And again, I wish I could point to something else, but it's very, very simple here. It's the dollar. Notice the dollar pulling back like that, and that's exactly why the markets, again, are getting that bounce. Now, notice right here the dollar's starting to uptick. What did we just show you on the spiders? If we go back to the market, look at this. The market's seeing a little bit of a sell candle. So I just wanted to prove to you guys how accurate it is in terms of the inverse to the dollar. The dollar is basically the dog that wags the tail, and the markets are following suit. Black box trading programs are set up precisely to track this and trade off of it, and that's why it's so accurate. And again, that's the way it's been. That's the way it's going to be, at least for the near-term future. At some point, it may change, but right now, for the last multi-month session, it has been tick for tick in the opposite direction of the dollar, and that's the market's trading. All right, now having said that, there's always money to be made out there, and I want to make that clear, folks. Whether you're going down or up, there are always trades to be made, whether, again, you're scalping or you're swing trading. We do swing trading and scalping here. Swing trading is more for the research center. Chat room is more day trading. And again, the research center and chat room offer a 7-day free trial for you and anyone else who wishes. Come in, join it. There's no obligation. Again, as long as you cancel before the end of the 7 days, you will never be charged for either service. And again, for those of you that have taken the free trial, that have stayed with us, you know you've made so much money in that free week that essentially you end up staying for your life. And that's the beauty of it, folks. Again, there's money to be made no matter what type of market. And again, we do the swing trading, we do the day trading. It's there for the taking. We're going to take it. Now, I think that's something of interest that's worth mentioning here. We're seeing commodities with the stronger dollar getting hammered. The USO, which tracks oil, is down $1 today. That's actually a pretty significant drop on oil. If we want to take a look at spot crude's down about $2.50, 2.5%. So very nice drop there. GLD is also taking a pounding, although it's off the lows. You can see the GLD is still down about $1 on the day here. And again, that's the gold ETF. The SLV, which is the silver ETF, is down about $1. That's coming off the lows as well. And again, as the commodities come off their lows, that has a tendency to prop the markets up. And you might say, well, why, if the commodities are moving up, even if oil's moving up, isn't that a bad thing for the markets? The answer is no, it's actually a good thing, because when oil goes up, then stocks like Chevron and Exxon, which are major components of the Dow Jones Industrial Average, will also get bids. And sure enough, if we take a look at CVX here, which is getting pounded today, but you can clearly see, again, it's starting to get a little bit of a bounce here. If this starts to get a bounce, and by the way, there's actually a very good support level here. Take a look at this, guys. See this little pivot low right down here? Look at this. And this little pivot low right here. There's actually a huge amount of support. I may actually trigger a long position here on this. You have a nice little bottoming tail too. In fact, yeah, you know what? I'm going to go long here at 99.65. There we go, 99.65 right here. And again, We'll trigger a long position right there and see what happens. We'll check back at it later in the video, but either way, folks, looking for a little bit of a scalp here based off this chart that I just brought up. Let's take a look at Exxon as long as we're looking at this chart as well. And again, ExxonMobil is having a pretty miserable day too, but again, it's starting to uptick as well. So those are two stocks that if they start to get a bid, you will see the Dow Jones Industrial Average pop up a little bit, and it probably rescues the market off the lows a little bit as well. All right, so again, we'll keep track of that and see how that all plays out. Now, let's go over to a couple other things here. First of all, I think the other significant area of the market that we're following are the financials. The financials have been under a lot of pressure. If you look at the daily chart, the financials chart has been probably one of the ugliest of all the charts out there. Here's Goldman Sachs' chart. Take a look. 175 early in 2011, and it's all the way down to really 133. Now, again, the one thing I have to say, though, with the Dow Jones Industrial Average down well over 100 points, Goldman Sachs is only down 40 cents today. That is not a big fall. So, in an interesting way here, we saw Goldman having an up $2 to $3 day yesterday, putting in a possible bottom, and today it's really not getting hit that badly. Even with the market at new lows in the recent days, Goldman Sachs is not at a new low. So, I'm beginning to see little signals here that you may have a short-term bottom on the financials in play, and that is something that I'm going to keep track of in the coming days, all right? JP Morgan is back down there, but again, you're kind of seeing it here still off the lows, even though it pierced the low here, still trying to hold up, even though the markets are at new lows. You're not seeing a lot of these financials at new lows, and we can take a look at Morgan Stanley. I think the same thing on Morgan Stanley. Yeah, take a look at Morgan Stanley here, folks, which, again, is, I think, a very good indicator. Here over the last 2 days, Morgan made a double bottom, or at least a 2-day bottom, and yesterday it popped up and had a big day. Today, even though the markets are at new lows in recent days, Morgan Stanley is not. And again, that's showing relative strength, in my opinion, in the financials. So that's something that I'm keeping a close eye on, folks. And again, we'll be discussing that all over the weekend in the Research Center. Again, if you take the free trial of the Research Center, we have some big things coming up. Sunday night, there's a No Hype Live broadcast, which again, you can ask questions of myself, and we'll discuss charts and trade setups for next week. We also have a lot of other things going on. There's new hot chart and alert posts, which are also included. The nightly video is every single night an update, a 30-minute long video detailing all the trade setups and all the market conditions and everything you're looking for. And that's just a few things, and there's more things in that Research Center. So again, to have a free trial of that, I strongly encourage you to take it and try it. All right, let's take a look at a couple other stocks today. Apple Computer is a little on the weaker side again. This stock has been weak for a long time. I made a call a while ago. I actually made a call when we were all the way back over here that eventually you were going to see the 200 moving average on Apple Computer. It's now almost there. I have the 200 moving average at around $323 to $24. I think that does hit in the next week or so. Although it will be interesting to see with Options X next week if they try to prop this market up across the board. A lot will have to do with what's going on in Greece. There's more word out of Greece today or this morning, which is why the dollar's rallying, that they're looking for a bailout by the end of this month. If they don't get a bailout, it could cause major issues. Ultimately, they're going to get a bailout. The European Union will not let things get that bad over there, at least with the ability to possibly bail them out. Now, eventually, I think it's going to get bad enough at that point anyways, where they're not going to have a choice. It's just going to get bad. But I don't think in the short term that's going to happen. They probably will give Greece a secondary bailout here. Interesting stuff, guys. I mean, just imagine what's going to happen in the United States when these states need all the bailouts that they're going to need. And that's probably coming late this year or early next year, where you're going to really have some budget issues that are going to be in major need. Remember what happened, and this is just a side note here, with the $800 billion in stimulus that the government passed about a year ago. That was all put towards the states and stuff. The states got a lot of that money. It helped them survive the budget issues, the budget deficits that they had. That budget is now done, and it's starting anew, I believe, in July, and they're going to have to make major cuts or they're going to face defaults. So it's something that's coming down the pipeline. I don't think it'll happen in the next month or two, but it will be something that the markets will have to watch for in the short term. By the way, guys, can we check right in here on the Chevron trade that I gave you guys that I'm in right now? And this is a live trade, and would you look at that, guys, nailing it, a home run here, 99.80, folks, 99.80 from 99.60-ish right here, all right, 99.65-ish right there. Look at that move up. All right, so that's just going to show you the abilities of the trading here at In the Money Stocks. I saw that intraday. I actually saw this while I'm shooting this video. This is live. I'm doing this live as I'm doing it. I saw that. Holy cow, that's a great setup. I know when to jump on that trade and, again, take some profits off the table here, throw a break-even stop. But that setup was beautiful. Look at this little pivot low right here. You went right in there. beautifully right in there. And again, look at the move up. And actually what I'm going to do is I'm going to sell half right here, and then I'm going to hold the second half at the break-even stop because I think this could have a little bit more upside to it, possibly all the way up to this trigger right here at around 100. So again, another 20 cents possible. And again, you can apply these methodology points that we teach to all time frames. If you're a day trader, then you use exactly what I'm doing here. If you're a swing trader, you still use exactly what I'm doing here. You just put it on the daily chart. You flip over to the daily and you use the same price pattern and timing to utilize that. So again, great trade call right there. Good job, anyone. Again, hopefully I have some traders in the chat room. I'm not in there right now since I'm doing this video, but any traders in the chat room, they probably saw the same thing because I've trained them myself. And again, you can always come in there and get trained by me as well. And look at Chevron here. Chevron continuing to push higher. It's a beautiful trade right there, guys. Good job. All right, enough said. Remember, free trial of the Intraday Stock Chat, free trial of the Research Center, webinar tomorrow, No Hype Live Sunday night. It's going to be a busy weekend. We're going to be making more money, and that's what it's all about, guys. Hey, take care. Have a great weekend.